benchmarks upcoming sort of cell cost forecast, what we try to do is we model the production cost of battery cells at all the assets in the lithium-ion battery database. So currently that's 412 assets under 210 producers across 26 countries. So what that allows us to do is to place all of these assets on the cost curve, identify your lowest cost and highest cost operations, and also be able to analyze every single asset and producer sort of cost competitiveness in the context of the wider industry. So what we've noticed from that, and I'm sure as expected, is that the lowest cost producers across all cathode chemistries are the Chinese producers. This is due to, it's a very developed market in relation to other regions of the world. The capital intensity in China is 24% lower than Europe and like 28% lower than the US, which means that it's cheaper to establish a gigafactory in China. You also have prices of other inputs like your labor and electricity, which also tend to be much cheaper than they would be in Western markets. And then the producers there also benefit from a vertically integrated supply chain, which means that they have access to raw materials at cheaper prices. Again, with battery technology, China tends to be the leader in that space just because of how mature the industry is there. We've seen this in LFP where, increased discharge capacity, better cell design, all of that has led to LFP being significantly cheaper in China. And what we think will happen is that those methods will be adopted by ex-China producers to some extent, and in the medium term, that might reduce costs in other parts of the world. But the Inflation Reduction Act has truly been sort of transformational in the space and how we forecast and see prices by the end of this decade. Because if you apply a flat $35 per kilowatt hour discount, what we see when we look at the cost curve in 2029, which is when we expect to see sort of the full impact of the regulation, is that suddenly your US producers are your cheapest producers in the entire world. And not just from you have the perspective of just a flat discount, or a flat tax credit, but there's also, we spoke about the rights law earlier. Your battery pipeline to 2030 has increased 71% in the US after the announcement of the IRA. So there's more build out happening, and you have that sort of, as manufacturing will mature, there'll be cost reduction from there as with sort of income combination with your tax credit of $35. So that will be very, very important for producers in that country. On the flip side, though, what we are seeing is, there's rising geopolitical developments that are, creating some uncertainty. There's the FEOC compliance, which is sort of becoming a big thing because, again, a huge part of all these critical minerals is mined and processed and refined in China. And so how that develops and how that impacts the industry is yet to be seen. You're also seeing some pushback on producers trying to establish gigafactories there. There's rising cost of labor due to some, trade union deals and stuff. So there's definitely a little bit of uncertainty around what the actual benefit derived from the regulation will be. But as it stands right now, we're seeing, that complete shift. US producers cheapest in the world, and that's quite significant in this industry.